Pete and I, we were working together on the floor of the Chicago Board Option Exchange. Wayne and Ryan were over on the Philly, and they were our bitter enemies. um, but they weren't. But we competed in various option classes, and when all of a sudden everything went multiple listed, folks, you could get run over really fast because, for instance, if you saw all of the trades that were going on in Starbucks, which we had at that time in the IBM pit, if you had all the trades in Starbucks, you could see when a big institution was building a big position, because they would come in and they would just stand there and buy, or sell, either one. And that's valuable information. If all of a sudden that trade is occurring on the Philadelphia, the Amex, the Chicago Board Option Exchange, and the Pacific, you don't have an inside track at all. In fact, you might think they're buying when in fact the real volume is happening over on Philly and they're selling. So we needed to create something, and luckily both computers and the way that trading was happening were changing at that very moment. I mean, in the late 90s, we used to trade in the neighborhood, folks, of I think it was still just over 1 million contracts a day, Pete.
Mhm.
And that's great. 1 million contracts a day. It was like 3 or 4 times what it was when I started, and probably double what it was when Pete started. But let me just show you this real quick, because this is, any of you guys can go see this. This is the OCC's website. The OCC is the Options Clearing Corp. So it's jointly owned by all of the options exchanges. It was started by the Chicago Board Option Exchange. Then they let everybody in to own the Options Clearing Corp. And this is why there's never been a failure in any option contract ever. Because it's not me against you. It's me selling to you, but being guaranteed by Goldman Sachs, JP Morgan, Oppenheimer, everybody that's a member of OCC guarantees the trades. They're the middleman. The trade comes in, trade goes out into your account, and the middleman makes sure that all of that money gets allocated. If it's a winner, to me; if it's a loser, to you, and vice versa. So they track every single trade. So this shows you, like I said, it was about 1 million contracts a day back in the late 90s. As you can see, the 52-week high was 70 million contracts. So that's like more than 2 full months of trading in one session compared to the late 90s. The average volume, again, you guys can see it there, February average was 50 million contracts. Again, almost 2 full months worth of trading in one day. That's the 2023 average daily volumes, 47 million contracts. I won't belabor that, but what I'm trying to explain to you guys, and I'll stop that share, but remember, you can always get it yourself at theocc.com. But what we were looking for was, okay, is there a way that we can see the trades while they're happening, rather than several seconds of delay, which then maybe I can't tell. Was that trade bought or was it sold? Because it makes a big difference. If they're buying it, you might already know that an option is a leveraged bet, whether it's bullish, because that's somebody buying a call, or whether it's bearish, somebody buying a put. Either way, it's a leveraged trade. Why is it leveraged? Because instead of buying Google today at $92, you could buy a 1 week out option on Google and probably spend $1. So what would you rather have? $90,000 on a trade, or have $1,000 and have the same upside as if you own the stock, but the trade-off is you only have it for a week, for instance. Whereas if you buy the stock, it's perpetual. As long as the stock's there, you can trade the stock. But an option, the timing can screw you up. So you really need to understand A, that there's leverage in there, and that B, the leverage is for a very short period of time, unless you choose to buy an option much further out. So we're just following unusual activity. And the people who are buying those calls and puts, like Glenn said, Glenn was the voice you heard earlier. As Glenn was saying, the people that are buying those could be Nancy Pelosi's husband, Paul. And I guarantee, because you've seen it as well, that he does buy a lot of those options. It could be Warren Buffett. It could be Bill Gates. It could be Michael Dell. All of those people buy and sell a ton of options. So if you want a coattail on people like that, everybody from an insider in the house to somebody who buys companies like Warren Buffett, you can do that by following the options, but you need to know, was it bought or was it sold? Because if it's sold, your hands are out. Sold, that means that somebody believes that they just want to collect premium. But if they're buying it, that's that leveraged bet that we talked about, where it's a leveraged bet to the upside. And if they're right, the option goes from $1 to $2, $5, $10. And we've seen a bunch of that this year. Wayne and Ryan have highlighted a ton of that. And then Pete and I have ridden that wave along with these guys. So with that said, I'll throw it back to either Glenn, Ryan, or Pete about how we do what we do.